All right. Hi, everyone. Joined on stage by Dan Morehead, founder of Pantera Capital. Thanks for making it, Dan. So Dan is one of the most respected figures in macro investing. He's an OG in crypto before it was even called crypto. It's just called Bitcoin at the time. So Dan started Pantera Capital in 2003 as a global macro hedge fund. He bought Bitcoin at $65 in 2013. Let that sink in for a little bit. And he built Pantera into one of the most respected institutional crypto funds in the world. You guys manage over $4 billion in capital today. You've returned multiple billions to investors. The Pantera Bitcoin fund alone has returned over 132,000% since inception. Dan, these are some big numbers. And Pantera is one of Alchemy's earliest investors since 2019. So thank you for believing in us. Thank you for joining us today.
Well, thanks for having me. It's been a blast working with you for 8 years.
Yeah. So I'd love to hear about, and I think the audience would love to hear about the early days when you guys bought Bitcoin. It was not like today. I'm sure that wasn't the most popular thing. It wasn't something everyone was doing. Tell us about what that was like back in the day.
Yeah, so I got introduced to Bitcoin in 2011, and I'm a bit of a libertarian sense, and so I was like, this would be great, but I didn't do anything about it. And then 2 years later, Pete Brigger and Mike Novogratz, who I used to go to college with and worked with at the beginning of my career, asked me to come in for a coffee and talk about Bitcoin. And I went in, and the coffee lasted for like 5 hours. I was like, oh man, this is the biggest trade of all time. And they offered me an office in their building, and I stayed for like 10 years. Like they finally just kicked me out like 2 years ago. Because it's just that big a trade. And the reason I'm still so excited is you all are believers, you're here, but like the majority of institutions still don't get it. They still don't have any exposure. So I feel like we're in, still earliest days. And back then, 98% of people thought I was crazy. Now only 60% think I'm crazy, right? But it's that's really the opportunity. Is not enough people understood it back then. And the entire community you could fit in a small hotel. Bitcoin conferences were like 200 people or whatever. It was really, really tiny.
That's insane. And so how did you tell us about buying the very first Bitcoin? Were there even places you could buy it? What was that like?
Yeah, so all the exchanges now didn't really exist. And a lot of it was just, calling up, people and doing trades on a phone. And Bitcoin, it's been super volatile. It still is. And in just the first 3-4 months, I was studying it and preparing to set up what's now, Pantera's Bitcoin fund and Pantera's venture funds and all that. Bitcoin crashed 50%, in a couple months. And, I was looking at it for a while, and we set up a bunch of accounts to be ready. And at the time, Mt. Gox was 85% of the market share. And I went over to Tokyo and met with the guy that had bought Mt. Gox and his chief of staff. And I'm like, there's something super wrong here. I'm not sending any money to these guys. And so 85% was trading in an exchange that seemed to be something bad going on. And so I went to Slovenia and met the guys at Bitstamp. And in the end, it hit $65. And I was like, okay, this is it. Got to go. And so we launched the fund and tried to buy 30,000 Bitcoins on this little startup nobody had ever heard of. It's now called Coinbase, but at the time they had one employee. And so I sent him a wire, and as soon as it hit the price, we're like, all right, let's start trading. And a pop-up said that my limit was $50. And not like in Wall Street where bucks sometimes see millions. It was like one Ulysses S. Grant. And I'm like, oh no, and so I sent this email in all caps, I sent you $2 million. I'm trying to buy Bitcoin. And their one employee, a guy named Olaf, wrote back and said, okay, your limit's $300. And I'd still be trading if that were the point. And the perspective is, now it's like 50 billion a day in Bitcoin. And, back then it was so hard to do anything, so difficult. There was no custodians. I had 2% of the world's Bitcoins in my head, wow, which is not probably the smart thing to do. All those things, all the stuff we all take for granted now, like custodians and everything else, just didn't exist. So it was super primitive.
Yeah. Wow. That's crazy to imagine because we've come so far since then. But I think a lot of what's gotten us that far is capital coming in and interest, and then that funds development, it funds users, it drives attention back to the protocols and the platforms that we're all building. So I feel like so much of those early days is really, because of people like you pushing the space forward. So, like, I know, you have this macro thesis, right? And crypto and Bitcoin fit into that. Today, your guys' data you shared with me, it suggests that AI is actually roughly overbought, like 33% overbought. Crypto is probably oversold by about the same amount. These are two assets you guys see as opposite sides of the same question. So when you think about crypto as a macro trade, how does AI fit into that framing, and how do you think about these two assets and these two industries and how they're priced against each other right now?
Yeah, so it is important. AI and blockchain have been connected since I started in this space in 2013. A bunch of really strong early blockchain people are also super big on AI, and they're converging now. We've done half a dozen investments in projects that are the intersection of AI and crypto. So they're definitely really connected. They share one thing in common, is they both are going to change the world, and so anything that's that important is susceptible to hype, right? And so things get overhyped, and then they, fear takes over and they crash. And I did go on TV a month or so ago and say that I think, because I talked to a lot of institutional investors, and they just look at these AI rounds and they're like, oh, I don't know if I could pull the trigger on those. The valuations are so high. And it's just my intuition that although AI is very important, it's going to go up big time over the long haul, it seems to be pretty fully priced right now. And we have an index of 10 of the top AI companies, both private and public, and that is trading at 33% over its log trend of the last 4 years. And then we've long graphed Bitcoin versus its log trend, and it got to 50%, it's 43% cheap to its trend. And that's the biggest divergence we've seen in history of AI being very fully valued, maybe overvalued. And then crypto, I think, is incredibly cheap relative to its thing. So as an investor, you're always trying to time things, and it seems like crypto is a good investment today, especially relative to AI.
Yeah, and that's so interesting. Like in that lens, it feels like there's been a lot of tailwinds in crypto recently. There's the administration, there's things like the Genius, regulatory clarity coming out more and more. A lot of the use cases that we talked about today on some of these panels. Where do you think we are in the cycle? Because there's all these use cases, but prices are still down. They fluctuate, like you said. There's hype, and then there's whatever the opposite of hype is. Like, how do you think about where we are today?
Yeah, so the 4-year cycle is real. And when I started trading professionally in 2013, people mentioned it, and I was like, oh, I went to school when the efficient markets theory was like doctrine, and everything was always, if you knew it was going to happen, it had to be priced in. It's not. The cycle is incredibly strong. Every 4 years, they cut the number of Bitcoin that are distributed, and so if you cut the supply of something and the demand's the same, it goes up. It really does it every time. And we've been doing this is our fourth 4-year cycle, and we make predictions at the beginning of the cycle. And about 3 years ago, when Bitcoin was in like 20,000 or something like that, we said that it would peak at $117,542 on August 11th, 2025. And it did that day, which is super freaky. And we were on a call with a bunch of our investors, and one of them said, hey, that's just an amazing call, congrats and everything. But doesn't that mean it's going to go down tomorrow? And I'm like, no, this time's different. The election, the regulatory thing, everything's different this time. Unfortunately, it did go down about a week or two later. And in the last 3 cycles, the up cycle has been, I think it's 1,080 days with a standard deviation of only 20 days. And the down cycle is 380 days with a standard deviation of 9 days. So like each cycle is so close. And the future doesn't have to be predicted by the past, but like it's happened 4 times. So if that's all true, we're probably in a kind of bear market until January of next year. And that might be true. And the thing that we had thought is, the election's such a big deal. The regulatory thing in the U.S. is so important that might overwhelm it. And again, I guess the cycles really do impact. And so I think we're kind of in the middle of the unfortunate, crypto winter. But again, mega bullish long term, and anyone that's held Bitcoin for 4 years has made money, which is nothing I've ever seen in any other asset class. So, if you can size your trade and hold it, for a venture style period, you're probably going to do really well.
And so zooming out past crypto to more of kind of like more of a macro view, there's a lot going on in the world today, right? We're in like one of the most fragmented macro environments of all time. There's geopolitical volatility, oil prices are up, and then now for the first time we have like 24/7 markets where people can, bet on outcomes and predict what they think the future holds. What does crypto mean in that world? Like, how does it become the inevitable trade? What does debasement mean there that we're seeing in different currencies? Like, in that picture, how do you think about crypto as a whole?
Yeah, so crypto does so many different things, but one of the things it's good at is storing wealth and protecting you from debasement of currency. And if you do zoom out, for a long time, wealth storage and currency was gold, right? It was finite. There's just the same amount of it on this planet. Like you can't make any more of it. And then governments realized that they could issue pieces of paper that were backed by physical gold. So they did that for a long time, and then they realized, wow, it's just more fun to print even more pieces of paper than we actually have gold to back it up. And so the era of paper money came in, and 2/3 of the world's surface is covered by trees, right? So you have no constraint on the amount of paper money people can print. And it's, ruined lots of countries. The US has had 8% inflation just like a few years ago, right? Like it hasn't ruined the United States, but it's been very tough on people's savings. And so I think the paper money era is really kind of coming to an end. And when you think about,
and it's relatively new too, right? Like I think people who are, our age, born recently, like all we've known is paper money, but it's actually like a relatively new thing, right? If you look at
yeah. So for thousands of years, it was gold, and then we had a period where it was pieces of paper backed by gold, and then in the last century, they started printing more pieces of paper than there are pieces of gold. A great example would be the oldest currency on Earth is the British pound sterling. And as the name implies, it used to be exchangeable for a pound of sterling silver. They have printed so many pieces of paper pound sterling that it takes 340 pieces of paper pound sterling to buy a pound of sterling silver, right? And so that's the deal, and that's why Bitcoin and crypto have become so popular. And I was actually just talking to a big group of Latin American investors, and I was saying that they're so lucky because, Americans often don't even think they're anything about currency, right? Like 85% of Americans don't have a passport, so they don't even think about foreign currencies. Latin Americans totally get it, that their countries are always devaluing their currency, and it's driving it down. Mm-hmm. And even in, this last cycle, the policy response to the pandemic was just crazy. The Fed bought $9 trillion worth of paper bonds, drove rates so low that it basically dared everybody in America not to buy a house. So they all did buy a house, and houses went up 45%. So massive inflation in everything, that's solid, like gold or stocks or Bitcoin, crypto. And if you really look at it, it's actually all those things aren't moving. It's a massive devaluation of paper money or debasement of paper money. So people are getting that. And I would say on the geopolitical side, this is a little bit kind of further afield, but I think one of the things we've been talking about for a long time is Bitcoin allows for the separation of money and state. Right? So way back in the oldest days, gold was completely independent of any state. And then, like you said, we've all kind of gotten used to, the US government issues currency and other governments issue currency, but we don't need to have it that way, right? We can separate the function of money from the function of state, and that's what Bitcoin is and other cryptocurrencies. So, I think that trend is really happening, especially, young people grow up with everything on their mobile phone, right? Why not do mobile money?
Yeah. How do governments balance that tension? Because a big part of how governments maintain their powers, like one, currency, and then two, the military. Like if Bitcoin and crypto starts to be more of an independent currency, does that complement the system? Is that like a potential replacement for the system? So is that a threat? Like, how do you think that evolves?
Yeah, so it's a great question. It's super. It was everyone had it in the front of their minds in the earliest days of Bitcoin. It is a threat, and especially the United States, issues these $100 bills that just traded in the world at zero coupon. Like it's an amazing business to print $100 bills and sell them to foreigners. So yeah, it is a threat. And in 2013, 14, it was pretty real danger that the U.S. could potentially just outlaw Bitcoin, right? And it was small enough back then, could have done it. And so thankfully, I think Bitcoin's reached escape velocity and can't anymore. But there still are a couple countries like China's always trying to kind of keep it in a box, But it's definitely, it's both to governments. It's definitely a threat to the printing of money and all that stuff. But ultimately, I think crypto should help with tax collection and all kinds of things that are good for governments. And even the U.S. is one of the largest holders of Bitcoin, right? The U.S. government owns 1% of the world's Bitcoins, right? So it's even great for law enforcement. And obviously governments are very pro law enforcement, so Bitcoin's good, and they own it.
Yeah, and then something that's really interesting is stable coins, right? Because Bitcoin is this independent, currency and can be used in a lot of different ways. But then stable coins arguably are, extending maybe like the predominance of the U.S. dollar, and it extends the ability of people around the world to buy the U.S. dollar. So like, I'm curious, there's over, 300 billion in tokenized assets. We had some folks on a panel earlier talking about that. Every major bank, custodian, asset manager, like we've all heard a lot about their tokenization strategies. What are you seeing in the stablecoin world? Like, what's the demand for stablecoins like relative to where you guys expected it?
No, it's a great question. Satoshi invented something really amazing that you can transmit value anybody on earth with a smartphone, pretty much free, pretty much real time. All those things are amazing, but it's pretty volatile, right? And so for, we're speculators and we think more people are gonna use Bitcoin and crypto, so we like to be long it because we like volatility. But if you're a migrant and you're just trying to get money back to your mom, volatility is not a good thing. And so, stablecoins have really been around about 10 years more now, actually. Tether was, 2014, maybe 15. So they've been around for a long time, and it is a great idea, right? You're taking all the kind of the beauty of what Satoshi built, but you're just taking out the volatility. And so stablecoins are incredibly useful, and they are growing very quickly now. Stablecoins are about 400 billion now in issuance. Collectively, they'd be the 13th largest holder of treasuries on earth, right? Wow. Like they're getting pretty big. The only thing I would say though is there's 17 trillion of bank deposits in America and lots more in the rest of the world. So stablecoins could easily grow, 20x from here and still not be too big yet or whatever. And so stablecoins are a massively important thing. And so your point about the US, 99.6% they're backed by US dollars, right? And I would say that the new administration in the US got that this is so good for America, right? Stablecoins are pumping our deficit out to anybody on earth with a smartphone, right? That if you're trying to run a $2 trillion deficit in the United States, a great thing is to be pro stablecoin. And so I think it is really good that America is, doing stablecoin legislation, and we're encouraging it because it's helping, make the U.S. dollar more important than it would be otherwise. It's mitigating, the impact of other currencies, and there are, there's 4 billion people with a smartphone, and most only 1 billion of them have access to kind of a normal bank like you and I would think. The other 3 billion stablecoins is great, right? And so I think it's a huge boon to the global population, and then again, it's nice for the U.S. because we're trying to pump a huge amount of debt out to people, and this is pumping debt out to them, at lower rates than the U.S. could otherwise access.
Yeah. Do you think crypto and the crypto industry is it driven forward? Do you think by kind of like countries like the U.S. with pretty mature financial systems, or is it more this global community you're talking about, which maybe doesn't have access to the same kind of financial infrastructure?
Yeah, it's a great question, and honestly, that's what I love about blockchain. It's global. There's only 1 or 2 countries that kind of mess with it, but the other 200 countries allow it to kind of do whatever it needs to do. And hundreds of millions of people already use crypto. And again, like 2.5 billion people share photos on Facebook, right? Like Bitcoin's way more important than photo sharing. So in
Hot take.
literally like less than 5 years, 1 billion people will be using it. And I think a couple billion in the not terribly distant future. And so it is going to have this huge impact on the world. And again, your question, developed countries versus developing countries, it's great for both, right? In the developing world, it's just so obvious, right? If you're a citizen of a country that's always devaluing, that's always, your bank's always going bust, your government is sometimes just confiscating your money or whatever, man, Bitcoin or crypto is great because you can keep it on your smartphone by yourself. Honestly, another thing, female financial inclusion is really important. There are a bunch of countries, 1 billion women live in countries that prohibit them from having a bank account, right? You can put Bitcoin on your smartphone, right? So there's a huge amount of use of it in the developing world, and you're seeing that take off, but also in the developed world. Like even in the U.S. was supposed to be so sophisticated. If if J.P. Morgan wants to send $100 million to Goldman Sachs, it takes 3 hours, right? They have to sit there and wait while FedWire grinds its way, and with your smartphone, you can send it in 2 seconds. So even in very sophisticated countries like the United States, Bitcoin and other cryptos, just better than the existing ones. And one of my favorites is SWIFT, the Society for Worldwide International Telephonic Communication, is so antiquated. It's an anachronism. Doing that on blockchain, sending wires, sending money cross border on blockchain is just, it's just so much better.
Mm-hmm. Mm-hmm. And so we've talked a lot about humans globally around the world. I'm curious about now robots and agents. So you said before, robots don't use paper money. They can't walk into a bank to transact. So where do you see as like the biggest real world traction right now? Crypto, stable coins, how are you guys thinking about investing as the world transforms and as robots, start to do more?
Yeah, so I think that, is an issue we all have to face in our investing, that, AI is coming at a rapid rate. AI agents aren't going to walk down the street to a ionic column bank and get a bank account. They have to use digital money. They're already using cryptocurrency. They're certainly going to have to use it. And so I think as agentic finance comes wrapping up at a very rapid rate, it has to be through crypto. And so there again, like if you're an investor and you're struggling to figure out how to have even a defensive position in AI-oriented stuff, cryptocurrency is a pretty good hedge because there's really no world in which AI is important that crypto isn't part of it. And so, we've invested in a half a dozen projects in the intersection of AI and crypto. But even just owning cryptocurrencies themselves is kind of a tangential play on the rise of agentic finance.
Yeah, absolutely. I think something we believe very much at Alchemy, and we'll be talking about this a little bit later today, is like crypto was made, for humans, but in a way it's maybe even better for agents as a substrate for transacting. Like agents, like you're saying, they can't walk into a bank account, they can't, they don't have a credit card, but they have this now open, digitally native, like global 24/7 on, layer that they can transact on. And it's like very clearly the place that agents are going to be. So that makes a ton of sense. Zooming back out, like you've going back to the beginning, when you guys first started, everyone's like Bitcoin is crazy. You took the right side of that trade, and that has gone really well. You guys spent years convincing institutional investors that crypto is a real asset class. Like, now the conversation is clearly shifted, right? Like, now with where crypto is, obviously more mainstream, more understood. I'm curious, in your conversations now with institutional investors, what are they like? How do they see crypto? And then, like, in the last year, like, where does AI fit into that conversation? Do people see those things, like you're saying, as kind of related? Are they separate? Are they competing? What does that look like?
Yeah, so it's a great question. I would say that we've, as an industry, made some progress, but it's glacial, and that's why I'm still so bullish. You know, 10 years or so ago, you know, a huge amount of meetings would be like, but wait, why are there 21 million Bitcoins? You know, and so it'd be like super basic questions that you'd have to kind of work your way through. But still, you know, there's a lot of reticence out there, a lot of skepticism, and huge amount of work to go to help institutions see that this really is a new asset class. And the way to think about it is that, you know, most people have a day job, right? And they're supposed to be in charge of bonds or equities or whatever. And they don't really have to have an opinion until recently, actually, on blockchain. So, you know, they could just do their day job and go home and never think about it. But it's now becoming a real asset class. And I've actually seen this movie a bunch of times. I was actually Goldman's first asset-backed securities trader in the 80s, and now asset-backs are an asset class, and they did the GSCI back then, now commodities and EM in the 90s. And, you know, I have total conviction that in no more than 10 years, everybody's gonna have a blockchain team, a blockchain allocation, and they'll have to have a position. And it's already starting. There are blockchain companies in the S&P 500, right? Huge, because up until about a year ago when that happened, you could ignore blockchain and not be short. And now if you say, hey, I'm not doing blockchain because my compliance department or whatever says I don't have to, you're short. And these are incredibly powerful IRRs. So I love that now. With blockchain in the S&P 500, you have to do it. And that's forcing people in. But even with all that, only 37% of institutional investors have any exposure to Bitcoin, other cryptocurrencies, or blockchain venture. That's so bullish, right? That 67% have zero and have to buy, and then all of them have to go from like 30 basis points or whatever they are now up to where 8% or something that it's going to be in 10 years. And that really is it. It's most institutions are still so slow to address it. It just is an amazing amount of buying power coming. And this is the first trade in my 40 years of doing this where it's, you know, quote, smart money missed it. And it's retail. It's, you know, individuals that were the first investors and the, you know, the big endowments, the big institutions, the big insurance companies, all that. You know, they're still way behind, and often literally 0.0 exposure.
Yeah, and as we talk to like banks and other institutions, often what's pushing them to make that move is the retail interest, is their customers coming and saying, hey, like, I want to own this, or why can't I have access to these assets, and so on and so forth, and that's really pushing it. What do you think? We mentioned like, you know, low 30%. There's still a wide gap between there and like basically every institution, you know, having exposure to this type of asset. What do you think bridges the gap? Is it just a matter of time, or do you think there are other things that need to happen?
Yeah, it's. I think unfortunately it is a matter of time, and it's kind of very kind of gradual. That all this time we've been talking to people about it. Everyone's kind of hoping there's some light switch that gets flicked on, and it was no institutions yesterday, and now everyone's in. It's, you know, the reality is we've had a couple institutional investors for 14 years, and we've had, you know, probably there's some that won't come in 14 years from now. So it's an accumulation of little positive things. A few of the big ones, though, I think the regulatory uncertainty in the U.S. was very, very harmful for our industry. The Securities and Exchange Commission was suing Ripple Labs and Coinbase, two of the best and biggest and most reputable companies in our space. So it's pretty hard to go to your investment committee and say, hey, let's invest in this business, you know, when the SEC's hammering the two best companies. So so now that the U.S. regulatory things cleared up, that's one of the big ones. You know, but there've been a handful of those kind of milestones like ETFs being approved 2 years ago, that just kind of help the next type of investor come in. And $200 billion came into ETFs and digital asset treasury companies over the prior 2 years. BlackRock's ETFs is the biggest thing they've ever done, and they do 2 trillion. They have 2 trillion of assets, right? The IBIT ETFs by far their biggest record, because there's that demand, and that's really it.
Growing too, right?
What's that?
The fastest growing too. Right?
Yeah, fastest growing, 0 to 100 billion in probably a little less than around a year. It just shows there's enormous demand, and when governments stop trying to repress it or kind of keep it away from people, it grows at a rapid rate. And so that's why I think when institutions are not afraid anymore of their regulator, it allows them to get invested. And once you get invested, then you realize something big is happening here. And the reason I'm so bullish is I've met thousands of people in this space. There's only 1 or 2 that have just said, you know what, that was a great run. I sold all my crypto and now I'm doing something else. Really, there's only 1 or 2 out of thousands. And that's why it's so viral. It just keeps going up because very few people ever just say, hey, I'm out.
Yeah. So all that said, like, if you zoom forward to like 2030 or 2035 or a few years out, what do you think the institutional portfolio looks like then? And what does the world look like then for institutional investors?
Yeah, so I do believe that in a time frame like that, only 10 years or so, every institution will have a blockchain team. They'll have blockchain assets, both tokens themselves and companies that are in the blockchain space. Luckily, we've seen it's starting to happen that the U.S. is allowing companies to go public. So there's been, a dozen companies go public in our space. That really helps. So now there's more things people can invest in. And so it'll just it'll keep accumulating that people will be able to invest in the space. And then to some extent, blockchain, I think, will be kind of like .com was in the 90s, like everything was a .com company, but that sounds stupid now. Of course, your business is on the internet. And so now everyone's like, oh, I'm a blockchain company. It's like, it's kind of cringy. Like, of course you're going to use blockchain, right? Mm-hmm. And so I think that's, in 10 years, people go, oh, of course, everything is on the blockchain. You can buy a stock on the blockchain. You can do this on the blockchain. So I think that's where we'll be. In 10 years, everyone will think, of course, it's obvious.
Yeah. What are some of we've talked a lot about, stable coins, tokenized assets, ability to access those assets from different parts of the market. What are the use cases that you're most excited about?
Yeah, so the biggest single thing we're doing is the intersection of AI and blockchain. Obviously, just massive. There's 4 humans investing $650 billion in AI. I mean, that is a wild occurrence. Yeah. And so that's just sucking an enormous amount of resources that direction. So that's been big. We're still investing in a bunch of infrastructure plays like Alchemy that help him build out all the basics. It's still very early on that. And there's some consumer plays that are starting to work.
Yeah. And so AI has been, really top of mind. It's been dominating the news cycle. We think about it a lot too, obviously important. But what's something that people are not talking about today? Like, would love to hear maybe like a unconventional prediction or something that maybe people aren't talking about today.
Well, I actually think the biggest kind of non-consensus view I hold is that within a time period like you're talking about, maybe 5 to at most 10 years, I think there's going to be massive strategic Bitcoin reserves. Mm-hmm. And I just think it's inevitable that it's coming. And it's this concept that I mentioned earlier, the separation of money and state, that the U.S. has a strategic Bitcoin reserve. I think in time, the U.S. will choose to grow that. There are countries that are aligned with the United States. They either have their currency pegged to the U.S. dollar or they have kind of security alliance with the U.S., like some of the GCC countries that already own Bitcoin in a strategic way. I think they'll formalize that. And then this is the non-consent. And I think all those will get a lot bigger than most people think. The non-consensus part of this view is I think the countries that are antagonistic with the United States are going to buy a ton of Bitcoin. And that's countries like China and Russia. And I know, China spent a long time talking negatively about Bitcoin. I think in the long run, they're going to realize they have 1,000 years of their life savings stored in a treasury bond that Scott Bessent can cancel. That's pretty risky, right? Like if I were them, I'd rather own Bitcoin. So I would say that if we look back 10 years from now, the kind of out of consensus view would be massive countries with massive stores of Bitcoin. And as we've seen, it's like the Econ 101 supply and demand graph. If you shift the demand curve, the price has to go way up. And I think that's the kind of out of consensus surprise.
When do you think a shift like that might happen? I know it's always hard to tell, but the incentives are there, like you're saying. So how do you think something like that plays out?
Yeah, so I will admit that I've been talking about money and state separating for a decade. And I think the Iran war could be the thing that kind of tips it. We're now choking a physical distribution point in the Straits of Hormuz. And, the financial choke point is U.S. sanctions regime. I think you could see that prompting, countries on essentially both sides of that to go, wow, Bitcoin is in the strategic interest of our nation, whichever, nation you want to pick. And that's the cool thing about Bitcoin is it really is the answer to almost everything, right? Like that's why I've been so bullish all this time. It's like it's a better currency, it's a better commodity, it's a better payment rail, it's a better store of wealth. And if you're aligned with the U.S., it's really good, and if you're against the U.S., it's still also really good. And so I just think, in the end, a lot of countries are going to come to. They should put, small percentage of their wealth. The U.S. owns 4% of the world's gold and only 1% of Bitcoin.
Wow.
Right? They could easily buy 4% of the world's Bitcoin.
Yeah. Wow. It's so interesting to think about. I think that is a great, non-consensus viewpoint, but it makes a ton of sense as we go out. I have one last question for you, and this is more of a selfish question. I think the audience would be interested to hear too. You've done incredible things at Pantera with your career. You spotted a technology way earlier than anyone else spotted it, and you had just an incredible amount of success. I would love to hear any words of advice for anyone in the audience who wants to do something similar, wants to build something great. Like how did you do it?
Oh wow, thanks. I think being willing to take risks is, the advice I would take. I tried to convince so many people on Bitcoin and blockchain, and just like waves of rejection, and even as recently as 2016, I did 250 investor meetings trying to sell our funds to people all around the world. And the total combined, all of 2016 fundraising for our firm was $1 million. Wow. We raised $1 million in 250 meetings all around the world. The fees from that were 17 grand. And so it was $100 an hour. Flew around the world. And that's just how hard it is to convince people on something new. And so the answer to your question is, if you have conviction, just go for it. And people might think you're crazy for a while, but you got to keep at it.
That's so inspiring to hear. Dan, well, thank you so much for joining us. This was awesome. I hope everyone enjoyed that conversation. I think this brings us to our last panel. Nikhil will be up with our final guest, Shane Copland, CEO of Applied Market. And for now, please give us a big round of applause for Dan.
Thank you.